Welcome back, Alpha Hunters. Hope everybody's having a fantastic final finisher Friday day of the week. Let's talk about it. All right, so yesterday I was not on live stream. I was busy all day. A unit I deployed with in the Army to Iraq. We had our 20th anniversary since we deployed to Iraq, so we got together. Anyways, I'll share some pictures with that next week. Let's talk about what went on yesterday. So we had a nice gap up on the market, sideways. I mean, kind of a little bit of a pull down there for the first like 2 hours. Nice little bump there for an hour or so, and then we got to a rollover here in the afternoon. Now, this is when the Fed, one of the Fed chair people or one of the board members of the Fed, was kind of talking and basically mentioned that there's possibility of no rate cuts this year. And this is very important to understand, as over the past 2 weeks, since March 20th, the Fed meeting, when Jerome Powell came out and said, oh yeah, we're probably still on pace, on track for 3 rate cuts, which is what they told us back in December. And they just kind of reiterated that, saying, yeah, what, the inflation data, we're not bothered by it. We still think it'll probably come down. We'll still have rate cuts towards the back half of the year, probably more in Q4. Okay, so that was 2 weeks ago. And, since then, we've had board members, even Jerome Powell himself, come out and say, oh, maybe we'll only have 2 rate cuts this year. Maybe we'll only have 1 rate cut. And that was one of the board members saying that Wednesday. One of the board members came down and said that maybe we'll only have 1 rate cut this year. And then yesterday, then we get someone to come out and say, oh, we don't think there will be any rate cuts this year. Guys, they're literally just testing the waters. Like, they're getting the temperature of the room, seeing what the market is willing to tolerate before they move ahead with what they're gonna do and what they're gonna change. That's what they're doing. I would be willing to say they want to see the market settle down. They want to see the market pull back a little bit, not be so exuberant. And I think they're going to try and kind of break the momentum on the market. And, the old saying, or not the old saying, but the saying that's been going on for the past 40, 50 years is don't fight the Fed. Well, over the past 2 weeks, they have literally come out and tested the market to see what the market is willing to handle. And if the Fed wants the market to pull back and not be so exuberant, I wouldn't fight that. I would be willing to let them have it. I would take the chips. I would walk away from the table and say, you know what, Fed, you figure it out. Whatever you're going to need to do to see the market pull back and not be so exuberant. If we go sideways here for the next few weeks, then maybe, you get back in. But I would be willing to just walk away, because the Fed over the past 2 weeks has gone from a 3 rate cut possibility to a 2 rate cut to a 2 rate cut possibility to a 1 rate cut possibility to a no rate cut possibility, all within 2 weeks. These are all different board members saying this over the past 2 weeks since March 20th. So, yeah, I mean, I would be much more willing to just walk away right now, because it seems like they're going to be much more adamant about trying to get the market to not be so exuberant. We're seeing other things, but that is what led to the market sell-off yesterday. If you were paying attention to the market, paying attention to the market yesterday, you probably already know that. But yeah, we sold off pretty good, and it was kind of interesting. I didn't look too much at the market yesterday, but the one time I did look in the morning, we were up like 0.5% or so, and I was like, oh, this is an easy sell. And then there you go. I mean, we sold off. I didn't put out anything. I didn't put out a tweet or any kind of messages, but I was just kind of thinking. I was like, oh, I would absolutely sell this gap up here. And that was even before we get the Fed talking in the afternoon. So, yeah, I would absolutely be selling the run that we've had today as well. We've had a nice run. We had a little bit of a gap up this morning. We definitely ended on the session lows yesterday. We had a nice run this morning for about 2.5, almost 3 hours. I guess you can make it 3 hours, 3.5 hours. Up until about 1 o'clock Eastern time, yeah. And then I guess the past hour we've kind of been pulling down. So I'd be curious to see kind of how we end today. But yeah, if we do form this huge rollover and we continue just to sell down into the end of the day, we'll look at that daily picture, but it won't look good. I can tell you that. The Qs got a pretty good sell down yesterday as well. Same kind of picture here on the Qs today, yesterday and today, really. IWM. IWM. I can't remember how much the IWM got hit yesterday. I don't even think I know, but you can see not as bullish today. They didn't even gap up really. They actually gapped down, but they traded. Yeah, they traded bullish with the rest of the market, but nice little pull down here for the past hour. DIA, same kind of deal. A little bit of a gap up, traded higher, pulled them back down. Okay, RSP. Yep, same kind of deal. Just kind of traded higher there for the first couple hours. Probably a little bit more choppy there in the first hour, but not too bad. As far as the daily, you know what kind of looks interesting here is the RSP has like a little shoulder, neckline, head, neckline, shoulder type pattern here. We broke that down. Here's the neckline. We just kind of retested into that today. I'd be curious to see what we do. What we do here. I guess. Hold on. Let me. There we go. We broke that neckline. We retested it today. So I guess that's the question, right? Is do we just retest the neckline? We retested that 10 EMA. RSP, I guess, with that huge sell down yesterday, that doesn't look great. A lot of these ETFs are not going to look great after yesterday, but yeah, that's a pretty brutal one. It's kind of a bummer I actually missed yesterday, and that kind of happens whenever I step away for a day. The market tends to do some crazy stuff. It did that back in November as well. I forget what day that was, but yeah, huge. I would have loved to have been on the market yesterday, or on the mic yesterday, because man, that would have been like right during our live stream. We would have been talking about it, and we were just seeing the waterfall happening. IWM, yeah, pretty good breakdown day yesterday. Hey, look at that gap up though, nice gap up. Not too bad. Qs had a pretty nasty one though, because you just see how low they closed yesterday. Qs ended down 1.5% yesterday. The IWM wasn't that bad. It was only down 1%. The DIA was down 1 1/3. The RSP yesterday was down 1%. So yeah, that Qs, man, they got smashed. That's not looking too good. But this is what I'm kind of talking about. When if we complete this rollover and we roll over here intraday, which it looks like the past 5 minutes have been pretty good, but if we do roll back over, this is a huge sell down candle with a huge upper wick. I don't like being bullish here. I really don't. And I haven't even gotten to yields yet. And yields are still moving pretty good. So I don't know, man. I think I'd just be much more willing to be bearish here. At this pace, you're gonna get the Fed to come out on Tuesday and say, "Oh yeah, we actually think we're gonna have rate cuts by the end of the year." Like, how does the market gonna take that one? Probably not well. Here's the VIX. VIX had a nice climb yesterday. Obviously, probably all yesterday afternoon. Friday, a little bit of a hangout day today, which, that doesn't look great. DXY. Dollar forming a pretty large upper wick there. Had a lower wick yesterday, upper wick today. That's kind of an interesting look. Obviously, we got some news this morning. What did we get this morning? I forget. Okay, so we got average hourly earnings. Fed Collins was talking, so that's curious. We'll maybe see what they say. Non-farm payrolls was probably the big one. Non-farm payrolls up to 303, so that's pretty good. Forecast is calling for 200. Prior was 270. So yeah, non-farm payrolls is pretty good. Unemployment rate 3.8. Hold on, we got unemployment rate. I thought we would get unemployment rate next week. So unemployment rate. I like this. Oh, I like this a lot. I'm really glad they did this. Although, yeah, and he gets the line chart, and okay, it goes to the line chart. So we got unemployment rate this morning. I didn't think we were gonna get unemployment until next week. So it had a little bit of a pull down. It's not a big deal, honestly. It's not a great big deal. Still just kind of in this upward channel. See what happens. Maybe next month with unemployment rate. Okay, so unemployment rate came out. Interesting. Gold, still doing gold type things. That and SLV silver. Is it SI, right? Silver futures, yeah. SI silver futures doing pretty good. Gold futures doing pretty good. Look, man, gold, dude's crushing it. They're gonna crush all year. And then, all right, so here's yields. So yields, you gotta absolutely love this move, right? If you're trying to be bearish on the market, or you're trying to be, bearish on bonds or whatever. If you're trying to just be bullish on yields, you got to absolutely love this, because we got this pretty nice move up to start the week, and yields are going to finish the week kind of strong. To me, that's kind of a strong day, especially for how they started the week. They started the week strong. They rejected out of this like 4.5 type level roughly. They formed this evening star reversal pattern here between Tuesday, Wednesday, Thursday. I mean, that's a completed evening star reversal pattern, but it pulls back into the 10 EMA, and you are bouncing off of that. Probably looking to have the highest close this week today, and probably that's gonna be the highest close of the year, most likely. And we look intraday. Okay, we had a nice pop this morning, pulled back, bounced, starting to form a little bit of a base uptrending off of this base pattern right here over the past couple hours. So yeah, I'd be curious to see how the yields end today. Been a lot of movement this week, a lot of movement yesterday, so maybe we'll kind of see the market just kind of not do much in this afternoon. That'd be curious to see if that happens. But if yields just keep pushing higher, I don't think it's the rate cuts, which typically people will say, oh man, when the rate cuts come, that's when the market starts to really sell off. And to some extent, yes, but that's because the Fed needs to step in and help out the economy or the financial markets because they're severely broken or damaged or something like that. We've had interest rates so low for so long. I think the big issue is leverage in the system. And if yields and interest rates continue to push higher, that will bust so many pipes, metaphorically speaking. Hopefully not in your house. And so I don't know if the market and economy could really withstand interest rates and yields really rapidly rising. We've been talking about that for a while. That would be the thing that would really scare me about being a bull in this market, is yields just kept rising. If they got back to 5%, I think the market would freak out. If they go higher than 5%, the market definitely crashing. Because remember, coming into this year, second half of the year, we're going to have Fed was talking about interest rate cuts, Fed funds cuts, and the market was expecting Fed cuts to start in March. Well, we're in April, and now the let's see what is oops, wrong thing. What is? Oh, that was also the wrong thing. It's the wrong thing. When is we expecting to get the first cut? Now, September. So definitely first one. Market is expecting the first one by September. July, a little bit more of a split there in July. Looks like a 50% chance we would be a quarter point lower. 75-ish% chance, I guess, will be at least a quarter point lower. So there's people really expecting that we might have the first rate cut there in June. So 50% chance we have the first one in June. 75% we at least have one by July. Well, if interest rates keep going up, that ain't gonna happen. If yields keep going higher, that ain't gonna happen. So, all right. Anyways, 10-2 inversion. Yeah, nice breakout this week. Kind of just hanging out for the most part today. How is I can type buttons. There we go. How's all the other yields? 30-year yield, not looking too bad here. Looking pretty good. If we continue bullish early this next week, probably won't be the best thing for the market. 2-year yield, man. Look at this flag pattern. It has set up very nicely. Let me get the marker, the brush. So there you go. I mean, look at that. You see that on a stock chart, you're like, oh yeah, I'm playing that breakout all day. All day. Oh man. I don't hear anybody talk about, oh, what happens to the market if the yields go higher? They talk about inflation, but they don't talk about yields going higher. Yields go higher. I think that's the real black swan right there. All right, HYG still just in the sideways channel. Had a nice little breakdown to start the week. Kind of gone sideways the rest of this week. Nice gap up yesterday, but it faded back down. Obviously, the market reversed. Really doing nothing here today. Really doing nothing today. All the movement was pretty much pre-market there for yields, interest rates, and looks like bonds as well. Yeah, LQD, a little bit of a gap down there, not really doing too much. But the LQD looks like it's about ready to roll over and break down. I mean, we've had multiple days here at these lows for the year. Moving averages are starting to kind of come down a little bit faster rate. Not exactly a strong bounce day. Yields look pretty strong. Yeah, I'd be much more willing to take some bearish plays on bonds. Yields do look pretty good. Equity side, I think it's not a bad time to be taking bearish plays on the market. I don't know if you want to go all in on that, but I think it's not a bad time to be doing on the SPY, maybe the Qs. TLT though, yeah, I mean, we just had a pretty good breakdown to start this week, and we tried to bounce yesterday and it came right back down today. I think the bounce today on the SPY and on the Qs, you can pick your best out of these five. I would be willing to say it's whichever one you think it looks the most bearish or has the best bearish setup, or you think will just be the most bearish. I think I would just take that one bearish. I don't like the Fed talking over the past 2 weeks. Let's see, September. Where's March 20th? So since March 20th, since that Fed day, when the Fed came out and reiterated their December policy decision to say, hey, our forecasts for the back end of this year of 3 rate cuts, possible rate cuts, I guess. Well, since then, over the past 2 weeks, they have come out and said, oh, you know what, maybe we'll do 2 rate cuts. Oh, you know what, maybe we'll have 1 rate cut. And that was Wednesday. Wednesday, there was one of the Fed board members said, oh, maybe we'll have 1 rate cut. And then yesterday, what caused a massive rollover in the afternoon was one Fed member coming out and saying, oh, what if there's a possibility of no rate cuts? Guys, that's just the board members. That's them testing the waters. That's them testing the waters. What's the market willing to handle? So, I think it's a great time to just be very, very protective of capital in the bullish direction. If you're not comfortable taking bearish plays, especially on the general market, and I get it, that is not an easy approach to investing, but I think it's a great time to just be protective as hell. All right, what do we got? Major news: stocks surge as job market continues to impress. Yeah, job market continues to impress. The Fed's decision on rates isn't getting any easier. U.S. economy booms with 303 jobs added in March. Let's see. Tesla scraps low-cost car plans amid fierce China competition. There's not much kind of going on today. That's the thing, is like, it's just like we got some movement in the market. I actually was kind of surprised by the movement that we got in the market this week, and a lot of it was just kind of driven by yields, the way yields started out the week. But I can go take a look at oil. But as far as like news stuff, we didn't really get a whole lot of news. I mean, we're just in that lull that we get in between earnings time periods. That's not a big deal, because there's other things that are moving. Crude oil continuing to impress. All right, there we go. Well, that's not going to help you fight inflation. Crude oil running. So HG copper's looking pretty good. So all these commodities kind of showing you, yeah. I mean, we got inflation. And there you go. I mean, that's inflation, man. All these commodities going higher, and then what's cocoa? Or is it chocolate? I don't even know how to spell chocolate. I just eat it. I don't know what the futures are for chocolate, cocoa bean. Coffee, beans. Nope. I don't even know if there is futures in the U.S. for coffee bean. Coffee futures, C futures. What is this? Let's check this real quick. I don't know if that's the real coffee futures, but honestly, they've been doing pretty good here recently. So we looked at silver and gold. Obviously, you can see gold just absolutely crushing it. I mean, look at that. Not too long ago, we were just in the sideways channel, and then now we're 15% higher, 16% higher over the and that's basically over the month of March. Yeah, that was just basically over the month of March, first week here of April. So, what about silver? Silver, since the month of March began, I'll take it from there. 20%. Man, silver crushing. I like both. I think I like silver more though. But man, they're both looking good. Tesla down. Oh, let's run through some stocks. Wow, we got a lot of green out there. A lot of big tech, big green. Jeez. Some industrials doing pretty good, or manufacturing doing pretty good. Okay. Tesla, though. Start off big red here. Tesla, man, this thing looks so bad. Yeah, that looks so bad. It doesn't look good. I don't want to be bearish on it right here, right now, but it doesn't look good. It just doesn't. All right, let's just run through these big tech guys. AAPL, the thing looks like it's also holding on, like Tesla is, just barely holding on. Microsoft looks pretty good. Nice bounce back day today. Yeah, obviously got caught up with the sell down yesterday, but nice bounce back day today. Who else? Alphabet. Alphabet bouncing back a little bit today. Is that all-time highs? That was all-time highs. I heard someone kind of mention that. Okay. All-time highs this week. We also hit all-time highs back in January. We just didn't hold. This is when they had some AI issues. So Alphabet, not looking too bad. Meta, what about Meta? Yeah, Meta crushed it this week. Wow. Meta did pretty good. Amazon starting to run up pretty good now. Up 2.5% today. Okay. What about Nvidia? Nvidia has stopped running. Interesting. How much were they down yesterday? Nvidia was down almost 3.5%. They were actually up 2.33 today. So doing somewhat decent today. Okay. AMD. Wow. I like this level. I like this level a lot, but man, you're really kind of hoping this base was going to hold here that we kind of just put in at the end of March, second half of March, but we didn't hold that. But I like this level because this is the previous all-time high going back to like 2022, I believe. Yeah, 20 late 2021. Late 2021. So, it's not a bad spot to be bullish here on AMD. But man, they got shellacked yesterday. Oh my goodness. They were getting faded all day. Look at that. Gap up and they got hit all day. And obviously you just see the acceleration. How much were you down yesterday, AMD? They were down 8.25%. Wow. Up 3%. I would be pretty honest. I actually like playing this bullish. I like playing AMD bullish. I would do this. I would be a buyer here. I would just have a stop loss below these lows. I would have a stop loss below these lows, and I'd probably just have two stop losses. I would set up my risk management to have a stop loss below these lows down here. Maybe like 160. I think 160 probably works just fine. And then probably just have your stop loss below the low of yesterday or today, whichever one's lower. But I mean, if you get this bounce here off of a pretty rapid sell off yesterday, I mean, that looks, it's pretty good reward to risk. So AMD got crushed yesterday. Intel getting crushed this week. Wow. Okay. So Tuesday we had a gap down. Wednesday, monster gap down, trade lower. Thursday, monster gap down, trade lower. Today, gap down. Or, yesterday we didn't gap down. Today, gap down, trade a little bit lower. So Intel apparently came out the other day and said that they are going to have like a loss in their foundry unit. That's why Intel's getting hit as bad as they are. Oh, GEV just got added to utilities. So I don't know if that happened yesterday or today. Well, there you go. They got GEV got added to utilities. Hey, all right. And then where's GE? I'm sorry. I'm like a dog. Squirrel. Oh, they put GE back in producer manufacturing. That is dumb. Why would they do that? That's stupid. They're literally an aerospace company. So why aren't they in the defense and aerospace area? Oh my, they changed them to industrial machinery. Why is it literally called GE Aerospace? Alright, man, whatever. That's dumb. That's dumb. GEV, though, electric utilities, this is more like, this should be machinery. Because they are not a utility company. And you know what? That's how I would treat this company. I would treat this company as a machinery company, and I would treat GEV. I would treat as a machinery company. It's probably going to track better with like Cat, Deere, some of these other industrial companies. Let's see, 3M. Yeah, 3M probably as well. Ooh, I don't know what TT is. Carrier. Yep. Maybe not LRCX, probably ETN as well, but not LRCX and not AMAT as much. which I don't even know why they're in this group. They, you know what? It's either those LRCX and AMT, AMAT should be moved to electronic technology, or they need to take KLAC, which is KLAC, and what's the other one? KLAC, and move it over there with LRCX and AMAT. And they need to put GE back over here. That's where that GE should stay over here. I also thought Honeywell. Yeah, Honeywell's a weird one, man. Yeah, I mean I know what's there. It's the defense contractor, right? That's how it's labeled. Yeah, aerospace and defense. Yeah, I get it. Well, but they're kind of like an industrial type, manufacturing type. But yeah, I would treat GEV like an industrial type, manufacturing type, and I would treat GE like aerospace and defense. I don't know why they moved them over to manufacturing. They had it right the other day. I'll put that in the market outlook video. That'll go out tomorrow morning. Kind of talk about the GE breakup, and just be aware that there's one that's a new ticker, GEV, which makes a lot of the components that utility companies actually use, but they're not a utility company, which is really frustrating that they're in utilities, man. Because they make the components the utility company use, but so do a lot of other industries. So that's what's kind of annoying about it. Anyways, me and my pet peeves, man. Just my pet peeves. That's what made, and to be pretty honest, I'll go back to a couple of years ago. That's what made GE so hard to invest in. If you go back, let's just bring up a month. This is what made GE so dang hard to invest in for years. This is a monthly chart. I mean, it's just like one of the ugliest looking dang monthly charts. You would have thought back in 2019, 2020, this thing was going bankrupt, right? It made it like they just split the company into three different businesses. I mean, they just split it into two different businesses, but a couple of years ago they split off the healthcare business. I believe back in 22 they split off the healthcare business. I don't know what the healthcare business is, but they split off the healthcare business. That's what made GE such a pain to invest in. They were just this huge, massive conglomerate that didn't do. They were in so many businesses, but they did nothing well anymore. They just did nothing well. They used to have GE Financial, which they had to sell off back in the 2010s because that unit was just making so many losses because of all the loans that they had during the great financial crisis. So this business, obviously you can see the stock chart's doing very well since they've done a lot of restructuring, right? Trying to focus the businesses and break them apart. That way they can be the most efficient that those businesses can be. And I think they're doing the right thing. It's a tough one, you know. If you're like a legacy type GE diehard, you know, you don't want to see that. I guess you probably don't want to see that. But to me, I think it's the better way to go, just from a business management standpoint. I mean, how do you optimize healthcare business when you also have aerospace and utilities infrastructure type business? Like you can't optimize the capital. You can't optimize your workforce. So good on them. That's a tough decision to make, but you got to do it. Other than that, let me know if there's anything you want to take a look at. Possibilities for next week. What are yields doing? Oh man, they're just slowly climbing. They're just climbing up that mountain, baby. Oh man. Q's currently up 1.25%. They did have a little bit of a pullback. Oh, they basically took out that entire 5-minute candle to start the kind of the top of the hour. So did the SPY. Let me go to a 1 minute. So it looks like, yeah, we had a little quick pump and then we dropped off there. Be curious to see how we end today. Oh, you know what? there was Fed talk this morning. The Fed's decision on rates isn't getting any easier. Was there? I was curious to see if we had an article about the Fed speaker this morning and what they said. Fed's path forward. Let me see. Let me just click that and full 1 hour chart economic data flow. Good grief. Fed's decision on rates isn't getting any easier. So this is all really old. So it's, let me see if there's something in here. Fed loading ads, man, is such a problem. Investors are increasingly concerned. Blah blah blah. 1 or 2 rate cuts in 2024 now seems to be more possible. Well, so okay, understand what we just looked at with the CME Fed Watch tool. The market is not expecting 1 or 2 rate cuts. The market is expecting like 1 rate cut to start in June, and that's a 50-50 chance, right? That's a 50-50 chance that we get 1 rate cut in June, and then a 75% chance or so, over 70% chance, and to have at least 1 by July. This article is literally saying 1 or 2 rate cuts in 2024 now seems more possible to traders than the median of the 3 estimated by Fed officials at their last meeting in March. And traders have been reducing their odds for first rate cut in June, which now stand at roughly 58%. That's the thing, man. I think the traders are positioning, and the market is really not. I think short term tactical traders are seeing this and saying, yeah, the market's about to have to reprice these Fed cuts, and I don't think investors are yet. Just curious. Okay. Just hours later, Dallas Fed President Lori Logan poured more cold water on near-term hopes for an easing of monetary policy. I believe it's much too soon to think about cutting interest rates, she said in a speech Friday. I will need to see more of the uncertainty resolved about which economic path we're on. So yeah, I mean, she's basically saying, yeah, I don't want to make a decision until we see some data clearly of what direction the economy's heading in. Are we going through inflationary periods, or are we having economic slowdown? Honestly, we haven't seen any evidence of economic slowdown. Inflation kind of up in the air, like if it's really growing. All that, yeah, it honestly, inflation doesn't seem like it's rapidly growing, but it might start slowly ticking higher because it has been over the past couple of months. So it's not like crazily. It's not growing nearly as fast as it was back in 2022. Like that was crazy. Anyways, Fed Governor Michelle Bowman also voiced concerns Friday, even saying the Fed may need to raise it. Oh my gosh. How is the market not selling off on this? Even saying the Fed may need to raise rates at a future meeting if progress on inflation stalls or reverses. How is the market not selling off, guys? Her baseline outlook, however, is the Fed will still lower rates this year. Well, that's probably because the market's not selling off because of that one sentence. Will still lower rates this year. I mean, I don't know how. I don't know. So literally this person, whoever Fed Governor Michelle Bowman is, literally just has no take. Says the Fed may need to raise rates, but then her baseline outlook is the Fed will still lower rates. Like, what grid are you talking? The Fed has got a tough few months ahead of them in terms of feeling confident about beginning interest rate cuts. Conference Board Chief Economist Dana Peterson said on Yahoo Finance Live. Got a tough few months ahead of them in terms of feeling confident about beginning interest rate cuts. Honestly, I have no idea how they didn't lower the expectations of 3 rate cuts this year at their last meeting. No clue. Some Fed officials did offer new assurances this week that the outlook had not changed, including Jay Powell. But Jay Powell last week came out and said, "Oh yeah, maybe we'll only do two cuts." So, I, honestly, what it seems like, it seems like the Fed doesn't even know what they're trying to do because the data is so confusing. And I think that in and of itself is probably the biggest issue right now. There's not a clear objective of what needs to be accomplished with managing the economy or helping the economy or helping interest rates, helping the job market or whatever it is. Helping the treasury with interest, with yields or interest rates or any of that. And that's that's the problem. Like I said, we're not seeing really strong inflation. We're seeing inflation be kind of stubborn, sticky, a little bit of an uptick. But we're also seeing jobs data be pretty good. But the problem is, but that kind of stinks because the labor market is so competitive that people can't afford homes, which kind of sucks because housing hasn't come down enough, and yields keep pushing higher. As yields keep pushing higher, I don't know, man. It just this keeps putting pressure on a lot of stuff. The more yields rise, the less leverage that there's going to be. So, Alphoners, it was a good week. Too bad I missed yesterday. Yesterday would have been a fun day to be on the mic. It really would have been. It would have been cool. Let's see. Oh yeah, I mean we would have been selling down that entire hour, or 40 minutes, 45 minutes. That would have been a fun hour, man. It's all right. That's what it is. We'll see what goes on next week. We're gonna start to get into earnings, I believe. Bank of America is usually among the first. So yeah, next Tuesday. No. So they will be having earnings on Tuesday the 16th. JP Morgan. JP Morgan will have earnings next week. Airlines are usually also first, among the first. American Airlines, not so much. Oh, I hit AUL, not UL. United will be also Tuesday with Bank of America. Not this next Tuesday, but the Tuesday after. Let's see. Love. Later in April. Okay. Who else? Wells Fargo. Wells Fargo looks like next Friday. And then the week after will be a lot of airlines and some other stuff, and then Tesla's towards the end of April. When is the week? So Apple will be the beginning of May. Microsoft's going to be April 23rd. Okay. Alphabet April 23rd so far, and Amazon looks like April 25th. So, yeah, we got still a couple of weeks before we get to the big show on earnings, but we'll start to get to earnings season next week. There will be a little bit of companies earlier in the week, but typically nothing crazy until we start to get to some of the banks on Thursday, Friday. Alpha Hunters, have a great weekend. We'll see what goes on next week. And have a great weekend. Yeah, that's it. Take care, Alpha Hunters.